All right, let's talk some tax cuts. And now I want to talk about the Powell plummet, especially. Joining us now, Steve Forbes, Forbes Media Chairman, Editor-in-Chief, and Liz Peek, syndicated columnist and Fox News contributor. The Powell plummet. All right, he can't help himself. He has to go in, wade in to the trade discussion, a subject he knows very little about. By the way, we don't know if the tariffs will be bigger. They may be smaller. That is a distinct possibility, as evidenced by Japan coming in to negotiate today, which could create a template for another 15 countries. But my point is, why does he have to wreck the market? And is he part of what's sometimes called the rebellion?
Or resistance, or whatever,
resistance.
I guess.
That's the word I meant, resistance.
Either one, right? Either one works. I think Jay Powell, unfortunately, really does become more and more a political actor. And I think that's really unfortunate, because I don't think in the beginning of his term, after all, he was appointed by Trump, that he really came across that way. But Trump's gone after him enough times that I think he's made him kind of an enemy. And I don't, it seems to me, if you're really concerned about the damage that the tariffs are going to do, this would be a time to be lowering interest rates. But he has obviously made it very clear that that is not on the agenda. And of course, we've had some pretty strong numbers on sales today, retail sales, and also employment. So there isn't much argument for moving either way, but somehow you just know he is not prepared to step in, Larry. And I think an awful lot of people think that's a mistake.
His original line was he's going to keep his powder dry. The Fed was going to do nothing and wait and see, which struck me as more constructive. I mean, for example, he says in his speech today, Steve, he said, well, inflation is still a bit higher than our target, all right? That's true, 2.4% versus 2%. But when he had those jumbo rate cuts last September and again in November, but September before the election, inflation was a lot higher than the target. So that didn't seem to mesh. And the other thing is he could have said, by the way, the economy is in good shape. Retail sales came in today strong. Manufacturing came in strong. You want to hear some numbers? Business equipment, which is in some sense the heart of manufacturing, up 1.7% in March, 1.8% in February, 1.7% in January. Last 3 months, annualized rate, business equipment, 20.7% at an annual rate. There is a boom going on in business equipment, and I think some of that has to do with 100% expensing retroactive to January 20th. Now, why didn't Jay Powell say something good like that?
Well, he knows, first of all, that Donald Trump is not going to reappoint him next year, already looking for a successor. And so he's getting his licks now. But the thing about the Federal Reserve and Jay Powell, talking about the tariffs, he doesn't make the distinction between monetary and non-monetary inflation.
Right.
If tariffs raise prices, the Fed can't do anything about that, manipulating interest rates. So stick, as you say, to what they know. Monetary policy, and that is the dollar's shaky right now when you look at the gold markets. So focus on that. Stable. How do they stabilize the value of the dollar? And I think you were right. I think earlier you talked about Paul Volcker back in the 1980s. Would go up on Capitol Hill with his smelly cigars.
Say nothing.
So they wouldn't keep the hearings too long. And then he famously said, you quoted him, central bankers should be seen, not heard.
Yes.
Take that to heart, Jay Powell.
That has always been my view about this whole story. Now, Liz Peek, do you really believe that Trump's going to sign tax increases for upper-end brackets and for small businesses?
I don't.
In your heart.
I don't think he's going to do that, Larry. And I can't really understand the rationale for it. We have a spending problem. We do not have a revenue problem. I go through these numbers all the time. Spending is basically around 23% of GDP is supposed to be 20, whereas revenues are about 17.4% of GDP. It should be 17. That's totally in line. So there's no rationale for it. It would clobber small businesses, which have, I think, contributed about 2/3 of hiring over the last decade. I mean, it's huge. Why would he do that when it absolutely could have a really negative impact on the economy?
Steve Forbes, last word on taxes.
Not the Republican Party should not be the party of envy economics. And so this talk should just be tossed out. Reagan's got it right. The envy people know.
Otherwise, you're left with Papa Bush.
Read my lips.
No new taxes.
We don't need that again.
He did it again. He lost his whole career. And by the way, the Laffer curve. I mean, do not forget, when the Republicans ignore the Laffer curve, they get into trouble.
when you tax more of something, you get less of
Yes,
it. So,
exactly.
I mean,
It's not-
it's totally unproductive. I can't imagine he's going to do that.
I may be Pollyannish. I read this Bloomberg article carefully, and there was a lot of hedges. This one thinks this one, and this one thinks that, and
So I just wish the president just put a stop to it and say tax bill means tax cuts, period.
he will. I think when the right time comes.
Yeah.
You couldn't get enough Republican senators to vote for a tax hike.
Oh, I hope, because
I don't
Larry, I
believe
am
it.
so
You couldn't get
despairing
enough.
of their fortitude right now. I mean, they're talking about how they won't cut Medicaid. There are so many good reasons to cut Medicaid and begin to draw down that entitlement, which has become an absolute sore on the back of the United States economy.
Well, slow the growth of Medicaid. That's
Yes.
all
That's
they're
right,
proposing.
that's right, that's okay.
That's
And
all they're
grow.
proposing.
Yes.
Grow the economy. Cut taxes
Yes.
and grow the economy. Keep the dollar stable. Steve Forbes and Liz Peek, thank you very much for
Thank
coming
you.
up.